What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have for y'all. I'm going to be starting a new series where I'm going to be breaking down all of our Algo bots performance for the week, in addition to being able to give my opinion on the market context for the week, right? So, what I created in order to assist me with this was an AI agent called Coda. Don't worry, there's a video coming out on being able to break down how Coda works. But what the aim of Coda is to being able to take all the four different indices, right? And that's the SPY. SPY is the S&P 500, the top 500 companies within the New York Stock Exchange, QQQ, DIA, and IWM, right? And I'm going to be going over all of these here and just letting us know what the market is doing, right? And what the overall sentiment of the market is for the week. So I prepared a brief for y'all. In addition to that, we also have a calendar where I'm going to be going over my bots performance and also talking about support and resistance. So if you haven't already, go ahead and smash that like and subscribe button. So let's go ahead and jump into this thing, right? So I'm recording this on March 20th whenever you're watching this, and this is for the week of March 16th through the 20th of 2026. So one of the things that we noticed during this week is that PPI came in super hot, fam. And what is PPI? PPI is the Producer Price Index. It measures what businesses pay for goods before they reach consumers. So why do we care about PPI, right? So PPI is an early sign of inflation. So fam, if PPI is rising, that often means that price rises are coming soon. And then traders and economists want to be able to predict the market moves. So what we saw this week is PPI came in at 0.7 versus the expected of 0.3. More than double these estimates. That's a something's wrong miss, not a rounding error, right? So that's what I'm saying, that PPI came in hot. And we also noticed that the Fed is holding, and that's going to equal a stagflation trap. So let's talk about stagflation real quick. So stagflation is when the price keeps rising, and that's inflation, but the economy stops growing, stagnation. So normally, rising prices with a growing economy equals more jobs, more spending, everybody's happy. But stagflation is the worst case scenario. You get pain from higher prices, right? And those higher prices could come from PPI or CPI, right? And when PPI came in hot this week, that's letting me know that maybe we got something coming in on the around the corner that we had to be able to be cautious of. And I think that's seeing that in the market. This priced into the market as well, right? So let's go back here. It's hard to fix because the usual tools work against each other. Rising interest rates fight inflation, can make stagnation worse. So stagnant growth equals high inflation equals stagnation. So PPI came in hot this week. This is an inflation signals. And while the Fed decided to hold interest rate, not confidence and growth, the combination raised stagnation concerns and it spooked the market. And definitely spooked the market, fam. All right, so let's talk about, well, SPY is the top 500 companies within the New York Stock Exchange, and we see SPY is down about 3.47% for the week, right? It opened on Monday at 668 and then it closed at 645, fam. So you can see that there are a couple of bullish days, and those bullish days are marked by the green, but there are more bearish days, and that's marked by the red. QQQ is going to be the top 100 tech companies within the NASDAQ, and as you can see, QQQ also had a down week. DIA is the top 30 companies, so these are the top 30 blue chip companies within the NASDAQ, right? And DIA also down for the week. IWM is the top 2,000 small cap companies, and we can also see IWM is down for the week as well. Now, VIX is the volatility index. I did have it. VIX is the volatility index or fear index. It measures how much volatility traders expect within the next 30 days, right? VIX is calculated from the S&P 500 option prices. When traders expect big moves, either up or down, they pay more for options and VIX rises. Low VIX means a calm market, but high VIX means traders are bracing for impact. Now, just look at this week, fam. This week has been one of those, like, bruh, like, you really better understand what you're doing, and your bots really better have some risk management and definitely some controls in place in order to make sure that you aren't getting pumped, you aren't getting faked out. Because that's what I seen this week. I'm not going to hold you. Right. We seen that on Monday we had VIX open up at 23.8, and then on Friday VIX closed at 29, almost 30. So there's a couple of signs that we're seeing here, right? PPI came in hot. The Fed is holding. So that's maybe we're seeing some stagnation risk here. We're having a SPY just not having its overall bullish, right? I'm not saying that every day has to be a bullish week, right? Or every day has to be a bullish day, or every week has to be an upward trend, right? But this week was just a couple in the past few weeks that we've been seeing that SPY has been on a downturn. I mean, there are some days that it's good for us, but then there's other days like, bruh, what are we really doing here? And you can see here by this heat chart map that primarily I think DIA and IWM is just like whatever, but SPY and QQQ again just taking a hit from the market. So let's take a look at it day by day, and as we can see, SPY opened from and I'm just going to do like maybe 2 or 3 days, and then I'll go straight to our bots. I don't want to make this video super long, but I definitely do want to make sure that I get the point across of like what the market has been doing, and then we're going to go ahead and jump into our bots. So as you can see on Monday, the open and then the close. So I thought the week was going to be good, but the only thing that kind of freaked me out was VIX being 20. It went from 25 to 23. So I was under the impression that, all right, we're probably up for a good week. And then it just went to shit from there. Excuse me. Right. So as you can see, just day by day, and I'm just showing earlier, right? And we have the pivot on Wednesday. It just straight crashed. When we have VIX escalated, then we have the market being able to correspond. And this is when PPI and the Fed decided PPI was greater than we expected, and the Fed decided to hold. So two events that happen on the same day, right? When you get these different type of economic events that happens, the market is definitely going to price that in. So the market didn't expect PPI, right? Remember what PPI is, the producer price index. It measures how much the prices are changing for businesses before the products reach the consumers, right? And again, the reason I care about this is because it's an early sign for inflation. So because PPI damn near came in double what we expected, I'm saying, all right, bruv, let me just look around the corner, peek around the corner, and just make sure who's coming through, right? And the Fed decided to hold, so just a little signs of stagflation there, right? And then we have a dead cat bounce that we thought that the market bounced IWM. The initial claims beat the expectation. VIX pulled back to 2440. The trap that the entire recovery got erased the next day, and Friday, the flush, right? Things just didn't work out the way we wanted to. So what happened? Producer price index, it dropped on Wednesday. Then we had the Fed decision. Then we also had the jobs claim that happened this week as well. And then we also have the Treasury takeaway. So my takeaway is that all four indices closed Friday at their weekly lows. There is no late day recovery, no position squaring. This is a bearish close signal. The stagnation setup is now in full play. PPI pre-accelerating and the Fed hold, yields rising, and risk asset sell-off with VIX at 29.21. Where I want to watch for the 645 level on SPY. If it breaks above the volume, sellers are still in control. Now let's go ahead and talk about our algo bots. And what is an algo bot? All an algo bot is a computer or an algorithm that you design that can buy and sell options for you based on the strategy that you give it. So I have a few algo bots that are running, and for this week, we are down a bit. Right. So as you can see, this kind of maps out. That's why I wanted to go over it first. Right. This kind of maps out what the market has been doing. Monday, the market was green. Guess what? I was green. Right. But just every other day is just like, bruh, kind of a tanker. Right. So let's just go ahead and look at Monday. Our best bot was ScreenyBaby. ScreenyBaby was able to make $198 off 40 trades. And ScreenyBaby is our, and I kind of need to make a video for this to be able to give us this just due respect, but I wanted to make another algo, right? But that does it a little bit different than my typical bots, right? So what ScreenyBaby does, it looks at the market for the first 15 minutes. Then every for the first 15 minutes of the market, right? And then within those first 15 minutes, every 2 minutes is taking a bias sampling. It's trying to figure out who's in control. Are the bears in control? Are they trying to push the price down? Or are the bulls in control? Are they trying to push the price up, right? And every 2 minutes it's doing this bias sampling. And then by 9:40, it picks SPY, again, the S&P 500, top 500 companies within the New York Stock Exchange, and then QQQ options based on that bias sampling. So it can be, all right, bet, based on the first 15 minutes, I think the market is going to go up, so I'm going to pick calls, or I think the market is going to go down, I'm going to pick puts, right? So this is just an idea that I've been playing around with, and right now I'm paper trading it to be able to validate it. And some days were good, fam. Some days are like, bruv, right? But the first day I ran it was on Monday. It was able to make almost $200. HFT Baby, I've been running it for a minute. This is our momentum breakout bot. It's able to make $4 off one trade. Penny for you. This is our SPY breakout bot. Again, 4 trades, $3. But let's go to a couple of trades that didn't work out, because I want you to see the other side of this too, fam. So I have Range Baby. Range Baby is our 3-bar squeeze breakout bot, right? These are the 3 trades that it took. So it bet that the market was going to go down on a trending day. We got in. Let me see if I can pop this out. Beautiful, fam. Hold on. Let me just make this a bit bigger. Pause. Hold on. So like we could proper talk about this. All right. We got in at 66. We bought it at $66. And then we got out at 63, right? So we got a better fill. We submitted a limit order for 73, but we got a better fill. And then the market went against us in about 5 seconds. And then there was a stop loss that were triggered, as you can see here. That stop loss triggered, and then we got out. So this bot had 3 trades, and it just didn't work out for it. And there's going to be a theme here that I'm going to break down in a bit here. Like VWhopper Baby, bot had 4 trades out of those. I think it was 50%. Yeah, 50%. 2 trades hit. And then the other 2 trades didn't hit so well. So let me go to my worst day. My worst day was Friday. So there was a couple of bots that did do well, which is Mini Bear. Mini Bear is the SPY, the S&P 500 momentum 5-bar breakout bot. This bot had 2 trades. One it lost, one it won. Then we also have Second Chance bot, 1 trade, it won. But remember I told you Screeny, right? So Screeny trades today took 4 trades, and it lost all 4 of those trades. And I noticed something, and I'm going to keep saying this until I break this down. But what I noticed, fam, is like I'm not taking support and resistance and respecting it like I should. So what is support and resistance, right? So support is when the asset is making lower lows and it's touching the support line, and resistance is when the asset is making higher highs and it's touching the resistance line, right? So let's actually give you a look at this on an actual chart so you can see how this looks. So I'm looking at the 1-minute chart of S&P 500, and I'm using TradingView. And what you're looking at is this green candle here represents the bulls. They're pushing the price up. And then this red candle here represents the bears. They're pushing the price down. This yellow line here is going to represent our resistance line. This green line here is going to represent our support line, right? So whenever we have the price going to the ceiling, that's letting me know that the price is pushing to. And also I'm looking at it with the Bollinger Bands, and this is going to tie in soon. So when we see a price going to the resistance line, right, that's letting me know one of a few things. First, the price is maybe being a little bit overextended or exhausted, and there's not going to be that much room depending on where you catch it. If you catch it here and being able to ride it back up, it's like you just had a beautiful trade, right? But let's say you caught it here, right? And you like, all right, fake out, fake out, fake out. And it's like, all right, it dipped a little bit, and then you have a monster way down. So what I was able to take and actually apply to our strategies is for them to be able to check the resistance and the support line, right? Just to make sure that we are not buying when the asset is making lower lows, and we're not selling, and we're selling when the asset is making higher highs. Now, I don't want to make this too long. If you do have more questions or want me to be able to break this down a little bit more, I am going to be dropping dropping a video specifically on support or resistance. But for right now, I think this is a great place for us to be able to stop. So our bots did have, not going to hold you, a bit of a down week, but that doesn't mean we're going to give up, right? So if I could just go through some of our other bots, I think one of our great bots today is AV bot, and I did have a video on being able to break down how this bot works, but if I don't, I'm going to make one for it. And as you can see, AV had a great week. There was, again, Friday, as we all know what happened on Friday. It just was a shit week. But let me know in the comments how it worked out for you and your trades this week, right? If there anything specific that you want me to be able to break down or go over, I'm not going to hold y'all. I'm still a noob in this thing, so there may be a couple of things that I do incorrectly, right, in the sense of being able to not sound as polished, but I'm still trying to give you all the information such that to let you know if I can do it, anybody can. But nonetheless, I'm gonna stop talking. It's your boy Creative. I'll be back at it again with another episode. Go ahead and make sure that you smash that like and subscribe button.